Hello and welcome back to the Lazy Trading series. Today we're going to take a look at where we're at within the market and see where to go next. This is basically something that needs to be done at least once a day. Quite frankly, nothing has happened. Since the last video, the market has been pretty much flat or ranging. No real movement, no real activity. Let's get into the chart and look at the screen and see just what is going on. As we can see over the last couple of days, there has literally been no real activity. Price isn't moved that much. But that doesn't mean there isn't situations to look at, options that potentially could become opportunities. So let's start looking at what we see and going through the chart. We can see that the buyers and the sellers have decided on a new level that they don't want to go above. We can see it for the time being. The same is true for a level they don't want to go below. We can use this to our opportunity. We also see that our limit order or entry order has gone nowhere, which means it will either expire on its own, or we can cancel it, or we can move it. I'm going to move it to actually go through and change the order to try to take advantage of what we have on the chart, where the new boundary between buyers and sellers exists. So to do that, I'm just going to click on it, and then I'm going to drag it down to the area that I want, and then I'm going to resubmit it. So now we have a modified order. I put it just above this particular point so that when the order does take place, it will be at the highest point of this range. That may or may not be a good thing. That also might be a problem if the market does what it did on this one particular candle, simply taking off and escalating. If we look at a higher time frame, for example, we can see that the current month has really escalated upwards. We can see actually that the last 3 months have been an uptrend. Even though the daily has had its ups and downs, the monthly clearly shows an uptrending market. That could be a problem. So let's go back and look back further. And we can see by looking back further that we have the upper boundary that was broken. We have a relatively stable lower boundary, but we have a very clear uptrend in this market. So we need to be careful with our choices. We don't want the market going too aggressively against us without having a large number of options on the table. So going back to the daily chart and looking at the last couple of days, there we go. We can clearly see that the last couple of days have been stable. That stability is something we might be able to take advantage of. There's no way of knowing for sure, and that's the whole point of the lazy way of trading. To not worry about where the market is going and simply follow it where it will. But that brings up something that is very prevalent on YouTube. As we look at this chart and we see very little activity, we can clearly see that one of the biggest misconceptions, or more accurately, misrepresentations of YouTube, is that trading is exciting. Trading is dull and boring. Trading is literally just waiting for something to happen. Whether it is the market moving in your direction or the market moving against your direction. It's not a fast process. It's not an overly exciting process. There's no bottles of champagne sitting on the side. It's just a real world look at pure mathematics. When you watch some of these videos, take that into account. Those videos are show. They're designed to manipulate you into a false reality that doesn't exist. There is no fear of missing out. There is no situation that's never going to be a once-in-a-lifetime opportunity. And even if it is, nobody knows it until after the fact. Take your time looking at the market. And for this point, I want to emphasize one very critical rule you should always have. Never buy without reason. Never buy without reason. Always know why you are making a purchase. Is it because of market structure? Is it because of a news article? Always think about why you are making that purchase. Always. You must have a clear vision of why you want into a particular market. Don't buy just because your friend says it's a good deal. Don't buy just because something did well last month. Look at the chart today, now, this very minute. Use the tools given to you, whether it is the 1 hour time frame, 1 day time frame, 30-second time frame. Look at the point of the chart, study it, analyze it, focus on why you really want to get into the market. Every single one of these time frames is just the same picture, showing you the same data with a different point of view. Pick what you feel comfortable with in how you want to react to the market. Never buy without a good reason. That must always be the very first thing in your mind. As you look at the market, think about where the market might go from where it has been. Think about how the market looks. Think about where a large majority of transactions actually lie. Look at the details clearly and concisely. As we see, the market has had a good upturn, and it looks like it might be on the verge of a downturn. Look at everything before you make a decision. Never rush. If you don't feel you have enough information to get into the market, don't. Don't buy just because. Only buy when you have a specific reason that gives you a real point of view for why you want to put money on the table and why you want the risk. We're going to continue with this series as we can and as the market allows. Some days might be like what we see here, where the market just takes off and goes wild. Other days are going to be as flat as a piece of paper. But that's fine. That's what makes this technique so wonderful, because it keeps you out of the mindset that something horrible is going to happen. Nothing horrible is going to happen as long as you don't overextend yourself. As long as you keep your risks controlled. If you understand risk management, you can flip a coin and make money in the market. As obscenely idiotic as that sounds, people have proven it with actual research papers that yes, you can flip a coin and make a trade based upon a coin flip and come out making money. It's that frightening just how important risk management really is. If you've got that, if you are able to understand your risks, you've got something 90% of traders in the market don't have. Share your thoughts. Leave a comment. Let me know what you think both of this series and how it has affected your thinking about the market. If you like this video, please give it a thumbs up. Help me grow the channel. Help me spread this information so that people can learn the real way to trade. The real way to get into the market and to actually make money without the gimmicks and the scams. Thank you for watching.